Hello my fellow freedom builders, and welcome back to the channel and to yet another video about some rock solid stocks. As you might recall, last week I made some videos about some potential rockets that could explode and go up massively. Today we are gonna have a look at some larger stocks in some good solid trends where you also, if you're into options, can sell some covered calls on. But if you just want to own the stock, this is the stocks that can be held for a while, and there is some good quality in them. What I'm going to do today is that I am going to look at the stocks with my charts, with my weekly and daily charts. I'm going to use the Stockopedia to see if there is the right quality in here that we want, and I'm going to look at fast graph that you might remember that tells us if the stock is at a fairly okay value. So that's what we're going to do today. Now, first of all, I am going to tell you a little thing that is almost a shock to me. And that is that I am getting close to 5,000 subscribers on YouTube, which absolutely blows my mind. We're not there yet, but within a week or so, I suspect we are there. That means that my kids told me that we have to do some special gimmick, because apparently I have to do that when we get to such a round number here. And that makes me think a bit. I asked my kid what I should do, and they said you have to cut off all your hair or make a bungee jump naked or something like that. I chose not to do those, but it made me think a bit, and my YouTube channel has begun to pay a little bit in advertising. Nothing life-changing, but a bit. So what I am going to do is I'm going to buy some prices, and then I am gonna give it away to some of the people that actually comment on my videos. I'm planning to start here around the 1st of September. So this is just to let you know, those of you loyal fans out there, that there will be some fun stuff here over the next couple of months, I guess, where I am gonna give away some different prices that I buy for the money I get in advertising. So that's it. We are gonna have some more chat about that later. The stocks today we're gonna have a quick look at is Broadcom, Facebook, Microchip Technology, and Best Buy. There'll be another video tomorrow with 4 more. I found 8 stocks for you that you can consider. So let's get straight into it. First of all, let's have a look at Broadcom here. Now, Broadcom is in a very good trend actually. It got beaten down like all the other stocks, and as you can see, they have been in a range that they are kind of in the top of right now. And of course, it would be nice to see it shooting up here. The RSI is where it should be. The comparative relative strength is where it should be. So we have a good strength. A good strong trend here, and that is what we are looking for. On the daily chart, you can see that it is doing what we like to see. It is coming up, bouncing on the 20, here bouncing on the 50, but we are just about where I would like it to be, and there could be some good potential in some movement up here. Now remember, these are not stocks that you should expect to have 100% in a month from. These are good solid stocks. However, of course, we can see that has gone up very much here from a bottom, 108%, but it can easily move up further anyway. So that was the technical side of it. It is in an okay place. However, there is a bit of resistance here. Some of you might take it here. Some of you might wait until it has gone up, but it is in a fairly good spot right now. All right. In the Stockopedia, we can see that they have a good quality of earnings, 79, momentum at 69. They don't value it too much here, 35, but we'll have a look at that later. But the overall stock rank is 71, and I do like it to be around 70 or above, so that is great. PEG ratio 0.7, and that tells us that even though the PE ratio is not too high, but the PE ratio divided by the expected growth in the future next year is only 0.7 here, and we like it to be below 2, so that is nice. Return on capital, not the highest, but operating margins are fair. Petrosky score at 5, and it says here that the bankruptcy risk is coming down into distress. I'll have a look at that in a second, but that is because that they are taking on quite a lot of debt, so they are measuring that in this way here. Earnings per share is moving up fairly nicely. It has been a bit choppy, but the estimates for 20 and 21 are quite great. That's also due to some acquisitions they have made. Free cash flow going up just like we wanted. they're actually paying a fairly okay dividend here, around 3.5%, and that is growing quite massively. However, the dividend cover is terrible. So you should not, or personally, I would not buy this for the dividend, because there is a risk for that to be dropping off. But then again, in 20 and 21, they are aiming for some dividend cover up around 2, so that is fair enough. But as you can see, the free cash flow is actually large enough to cover this, so maybe that is okay. The dividend cover is normally calculated by taking the dividend in dollars divided by the earnings per share, and then you get the dividend cover. As you can see down here, the net debt is growing quite massively, but they have a fair amount of working capital also. One thing you could say is that their interest coverage is only 2.1. That is not quite as good as I like it to be, but they can pay the short-term interest, so that is okay, and the current ratio is above 2, preferably a bit higher, but above 2, that is the least we want to see, and the current ratio is their assets divided by liabilities. All right, but we can see nice sales growth and so on here. Down here, the analysts are saying buy, so all in all, this is quite fair. If we look at the fast graph here, we can see we have the earnings growth, we have the normalized PE ratio here, and the black one is the price. The white one here is the dividend. We can see that goes up nicely. And as you can see, it is in a fairly okay range right now. The price is oscillating around the blue line here normally, so you could say it is quite in a high spot, but it is not crazy high, as I've seen with some of my other candidates that I have simply taken off the list because that they had gone, the price had simply gone off the chart like this, and left these lines down here below. So this is fairly priced, not the cheapest of the stocks, but it is fairly priced, so you can consider it. All right, on to the next one. And the next candidate is Facebook. As you might recall, I have mentioned this several times also down here, where I said in a couple of videos that this was a very nice stock and I saw some very good value in it, and there might still be some. Facebook, of course, was beaten down as all the other stocks with the virus crisis here in the spring, but has really moved up nicely with almost 100%, but I think there is more in it. It is in a green zone, meaning RSI above 50, CRS above its 2 moving averages here. We can see that it was down here below the 50 line on the RSI on a daily chart, but it seems like it has established itself above here, and it's following its 2 moving averages here nicely. So on a technical part, there's nothing really to complain about here. When we look at the Stockopedia here, we can see that they have a crazy high stock rank 90. We have 94 at the momentum and 99 at quality. 1.8 at PEG ratio, we do like that below 2, so that is great. As you can see down here, return on capital, on equity and operating margins are very high. Petrosky score is 7, and bankruptcy risk, the Altman C score, very high here, so that is very much in the safe area. And already here, I can say that if I should choose between Broadcom and Facebook, I would definitely choose Facebook. Here you can see earnings per share going up just as we want it to be. Cash flow going up nicely. The net debt is negative, meaning that the interest coverage here is 100. No dividend, so we don't have to be concerned about that. Earnings per share growth, very nice, and everything is just pointing up. All analysts are saying buy, and there's not really anything here that we can complain about. Going to the fast graph, we can see that it has been going up and down, below and beneath or above this earnings line here. They had a bit of a chop down here in earnings, but that is exploding again now. Well, we are above the line here, but as you can see in the forecasting mode, we can easily, if just they keep their normal speed here, we can easily make some very good money, 23% per year here. And even though they cannot keep up with their normal speed, we can actually see kind of a drop in their performance before we go into negative. So I'm not too concerned about that, and Facebook is in my portfolio right now, I can say, and it is also one of the stocks that I have been selling covered calls on. I must admit I have been called out a couple of times here lately because it has gone up so much, but then I just bought the stock again and sold some new covered calls. So Facebook, absolutely one of my favorite stocks, but of course it can't be beaten down, but it is one of my long-term plays. All right, on to the next stock. And here we have Microchip technology. Now, Microchip technology is not one of the strongest candidates here, but you can see it just chipped back into the green zone here. We have been below in yellow zone where the RSI is above 50 and the CRS is below here. But now it is above in both cases, so we are in the green zone. You could easily argue that there is some resistance here, and therefore many of these long-term candidates, you can either take them now or you can wait till they have broken a resistance area and then wait for a retracement. So these are not stocks that you have to grasp right now and just run with them, because it is probably not stocks that is going up with hundreds of percent very quickly. You can easily see here that it has been a very chubby adventure to be a part of Microchip chip technology here for a while, but it is a stock that can easily grow fastly, so it is worth to keep an eye on. On the daily chart, well, it is a bit choppy here, but it is not the daily chart we really buy these from. It is more of a long-term perspective. When we look in Stockopedia here, we can see 88 in the quality, 75 in the momentum, and 75 in stock rank. That is fair enough. PEG ratio at 0.4 because they are expecting earnings per share growth at 65% here. When we're looking at the quality, well, the return on capital is not amazing, but the operating margins are quite nice. They have a very high Petrosky score, and the Altman C is just moving down towards a bit higher bankruptcy risk here. It is not that we necessarily have to fear for a bankruptcy, but the Altman C score is a statistical score telling us what the percentage risk is for a bankruptcy, and that grows as long as we go further and further down here. Earnings per share is growing nicely, as well as the free cash flow here. They have a fair dividend around 1.3% growing, but not very much. And it is expected to drop actually in 22. I'm not 100% certain why, but they have at least a fair dividend cover here. So that is not something to be too concerned of. And we have the net debt is high, but dropping. When we see at the interest coverage, that is actually a bit lower than I like it, as well as the current ratio. So this is, I guess, number 4 on my list of the 4 today. This is not my favorite, but it is an okay candidate. We can see that the analysts are saying buy, and that is important that we have a lot of analysts and that they are all saying buy. When we look at the fast graph here, we can see that they are, again, they're not in the cheap zone. It would be preferable to buy them down here in the dark green area here, but it is hard to find stocks right now that lies down here. So we must sometimes make a bit of compromise here and say we take the ones that are not too high above their earnings per share line and the earnings growth line here. And therefore this one is one that has some growth potential up to the estimated lines up here. So I'm not too afraid of them, and it will, they really have to make some bad mistakes to get down to the losses down here in the future. So I believe that if you want to keep this one in 1 to 2 years, then there is some very interesting potential here. And again, in these stocks, we are not looking at the products or anything right now. We are simply looking at the technical part and the fundamental, the quantitative fundamentals, the numbers here. We're not looking too much into the qualitative fundamentals, meaning is there a future for the market? What about their chips in this case? And what about the competitors and so on? All right, on to the last stock for today. And here comes Best Buy Co. And as you can see, quality 74, momentum 95, stock rank 96. So all of all, our first screening here tells us that this is a fair buy here. Maybe not, to dare say, the best buy of the 4, but it is not the worst of them anyway. PEG ratio is a bit high, actually higher than I do like it. And that also, when we look at the charts here, we can see that it has gone up very much. And actually, before I buy it, and that's just, of course you can buy it right now, but I do like to see somewhat of a retracement returning down to the 95-100 area down here, which will make it a much better buy. Right now it is just shooting up, and you can maybe take it as a shorter term trade where you believe that this momentum will keep going. Personally, I will wait with this one until it reaches some sort of retracement down here, and then I'll look to time it on the daily chart on the 20 SMA here. But as you can see, it is a fairly stable company, and when the price gets way lower down to a 95 to 100, we'll also see a PEG ratio dropping, of course. So when we look at here, return on capital 28, on equity 42, operating margin is quite fair for the industry. Piotrowski scored 5, we do like it at 6, but that is fair enough, and the Altman C is just in the safe score. When we look at the earnings per share growth here, or the normalized here, is going up slightly. You can see the earnings per share growth is dropping, but it is fairly solid. And on the free cash flow side here, if we can get it to show that, that is growing just like we wanted to see. I really love to see the free cash flow growing like this, because that means they have money in their hands to invest with. So they do pay a dividend at 1.75. They are planning on keep growing that, and they have a dividend cover that is very fair and nice here. We can also see that compared to the free cash flow here, a trailing 12 month, they have a dividend at $2 and a free cash flow at 10, so they have $8 left after paying the dividend. That is what we like to see. The net debt is negative, but they do have a bit of short-term debt, of course, but their interest coverage is very nice. A current ratio is too low, and that is something I would have to dive into the numbers to check out, because there can be something about their company structure. But the current ratio, I do like that up around 2, but sometimes this can be acceptable in certain cases, so I would have to look into that. But we can see the analysts, they are just here around buy here, so that is fair enough. When we look at it here, we can see that again it is one of these stocks that has been shooting up, and again, if we see a drop down to the 95, 100 area, that will be around here, we will be in a lot better space. As for the value, we can see that the earnings growing up here, and the normalized PE ratio here, we would like to see that a bit lower, the price a bit lower compared to these two here. Oh, this is a bit annoying. But if it drops down to 95, 100 here, I could definitely be interested in buying that, because then we would be in an area where it would take almost nothing just keeping these estimate lines here, and we would make almost a guaranteed profit. So that was the 4 stocks of today. It was Broadcom, Facebook, Microchip Technology, and Best Buy. My favorite of these 4 is definitely Facebook. And it has nothing to do with me using it all day long, but all of the setup here simply makes me state that in the first place of the 4 is Facebook. Tomorrow I'll come up with 4 new competitors here for the first price of the 8 stocks, but I can tell you that right now Facebook is on the first place. That's all for now. Take care of yourself and your money out there. Remember to subscribe and keep an eye on for the competition coming up in the near future, where all of you loyal fans and subscribers will have the chance to win some giveaway prizes here on the channel. That's all for now. Bye. I'll talk to you again soon.